Good afternoon, everyone. Thanks so much for joining us for our live Thursday webinar. I'm Leah College, the director of RealWealth Realty, and you've joined us today to find out how to analyze your real estate deals like a pro. I get this question all the time in strategy sessions with new investors and experienced investors. People get a little shaky when it comes to all the terminology and all the formulas of calculating return on investment and cash on cash return and cap rates and internal rate of return. It can be kind of overwhelming, and it doesn't have to be. You don't need to be a mathematician to be analyzing good opportunities and investment properties, but you do need to know a little bit about what you're doing. And more importantly, you need to know what platforms you can leverage. So we've got a little presentation for you today about analyzing properties. I'm going to share with you what we do at RealWealth, how we're analyzing the properties that all of the property teams we work with are sending to us on a daily basis. And I'm going to be joined a little bit later in the presentation by the owner and CEO of the platform that we use. Anton Ivanov from DealCheck is here with us this afternoon and going to give us a little bit of an overview of the great software and tool that he put together to help investors like us understand and analyze investment opportunities. So thank you so much for joining us. Got a couple quick housekeeping items before we jump into the content today. Okay, our standard disclaimer. So while we at RealWealth have really attempted to bring you guys accurate information, the possibility of errors exists. The strategy that we're going to talk about might not be appropriate for everyone. Real estate investing is not for everyone. So there might be some investing options that we won't discuss today that are more suitable for your specific situation. So as always, with any investment decision, be sure to consult your personal team for advice, your accountant, tax advisor, attorney, to discuss your specific situation. Past performance is no guarantee of future results. We're talking about proformas today, which are projections. So you've got to keep that in mind when you're analyzing any opportunity. Real estate purchases are subject to risks, including the possible loss of total amounts invested. So we are making every effort to bring you accurate and current information, but know that the possibility of errors exists, and know that the strategy might not be for you. Okay, so if this is your first time joining us live, I love when you guys are on because we can interact with each other. I've got my questions panel open here so I can see questions that anyone sends in. I will try to interject on these questions while we're on the relevant topic. But sometimes it's difficult to talk and read at the same time. So we will have a designated Q&A session at the end where we'll try to get to all of those questions. But I love to have you guys interacting with us. So for those of you who are new to RealWealth, it's been a while since I've really formally introduced myself and kind of shared with you a little bit about my investing journey, but I want you to know a little bit of my background and where I'm coming from. Like I mentioned, I'm the director of RealWealth Realty, but I also serve as an investment counselor, talking with RealWealth investors daily about their investments and helping them put plans together. Most importantly, or maybe most interestingly, I'm a real estate investor myself, building my own passive real estate investing portfolio, long distance, mostly all out of state. My real estate journey really was born out of my husband's career. My husband is an active duty Army officer, and so his career has been an amazing experience for us, but it's kept us moving quite a bit. We've spent most of his career stationed overseas, living in Asia, Europe, and South America. We've lived on the East Coast, West Coast, and like I said, we're currently in Texas. Texas is our home state. We're both born and raised in Dallas. And it was really this kind of nomadic lifestyle that got us really comfortable with the idea of owning investment property in places where we were not, or places where we knew we wouldn't be long term. We got our start, buying our very first rental property in tiny town, Alabama. We were just smart enough to run some very basic math and see that we could rent this cute little townhome for $950 a month, or we could buy it and our payment would only be $780 a month. And then we'll just hang on to it and turn into a rental when we get the next duty station. And so we started doing this, and at some point, We were feeling, I think, proud of ourselves. Fast forwarding a couple years, we're doing everything right by traditional retirement planning measures. We're maxing out 401ks and TSPs and looking at these retirement accounts that are great. But at some point we realized, wait a second, we can't touch those until we're 59 and a half. And what if after my husband's 20-year career, we want to do something on our own? None of that money is usable to us, at least not without penalties, right? So we started looking at the couple rental properties that we had and really had this light bulb moment where we realized, oh, we need to do more of that because these homes are appreciating, they're cash flowing, they're always rented, a tenant is paying down the mortgage for us. And so we immediately started looking for ways to scale and grow our portfolio and be more intentional about purchasing cash flowing rentals. And at the time, we were living in Europe and we had just completed a live-in flip in North Carolina. So we had all this cash and we're like, okay, we're going to get this reinvested. How can we do this? And that was actually when we found RealWealth. And I started, that was back in 2016 or 2017, I believe. We started investing through RealWealth and scaled our portfolio pretty aggressively, but also totally passively, employing the teams and the property managers that the teams work with to operate our portfolio. And so we just got hooked. And then long story short, I ended up working for RealWealth a couple of years later as well, but still continue to purchase investment property. It's definitely changed the financial trajectory of our life and our retirement plan. And so I am just endlessly passionate about helping other people kind of see that same opportunity and time horizon kind of shorten on their own retirement journeys. So that's a little bit about me. Again, the purpose of today's webinar is really to address maybe the elephant in the room. I was literally just on a call this morning with an investor who's very hung up on the tight cash flow of properties. It's obvious, right? Interest rates are very high, getting close to the 8s. I think we've softened a little bit now. We're in the mid 7s or so this week. But it's just a deal killer. Especially from a cash flow perspective. It's very difficult for deals, especially in growth markets at higher price points, to offer any positive cash flow. You're lucky to break even on some of those deals. And so for some, that can be a total deterrent to opportunities. And so I constantly am kind of revisiting this slide here, really focusing on all the different ways that real estate pays us. Most investors are familiar with the first two there, appreciation and cash flow. But people probably don't give enough credit or weight to the other ways that real estate pays us. A tenant is paying off the loan for us. So there's principal pay down accruing for us each year. And principal pay down becomes, we pay a lot of interest at the front end of any loan, but the longer that you hold a rental property, the more substantial that principal pay down becomes to your benefit. It's exponential. It's the longer you're in once you get to that really efficient principal pay down point in an amortization schedule. The tax benefits, there's all kinds of great depreciation that you can take on assets and deductions that you can take to be able to take all that cash flow that you get from these properties and make it look unprofitable so that you don't pay any tax on the additional income that you have. And then of course, there's a whole slew of other tax benefits if you become a real estate professional that can really add up and help offset even W-2 wages of a spouse or a partner. And then a hedge against inflation. This one was, I think, became more people's focus than usual over the last couple years. Inflation works for us in two directions if we're a leveraged buyer. Not only do assets inflate with inflation because the buying power of the dollar is weakened, right? It's requiring more of those same dollars to purchase that same asset. The home value is being inflated. But if we're leveraged investors as well, meaning that we have borrowed 75% or sometimes 80% of the value of the property, the debt that we are paying back is eroding with inflation. We're paying them back on yesterday's dollars, essentially. It's a fixed rate. They're not coming and adjusting how much we pay them or how much we owe them based on the value of the dollar that day. So the hedge that we can create for ourselves by purchasing leveraged assets really boosts our return. So I've taught an hour-long class on this topic. This is just touching the surface there, but I really want you guys to be looking at opportunities and looking beyond year one cash flow. So the method that we use to analyze property is a proforma. A proforma is simply a financial analysis of an investment property. It demonstrates our breakdown of all of our fixed monthly expenses relative to the income that a property generates. So this little icon here, super simplified proforma here, indicating your rental income minus all your expenses, showing you your cash flow of that property there. Something that's important to note is that proformas are projections. They are our best guess at how a property will perform. One of the most challenging aspects of a proforma is that everybody uses a slightly different version of a proforma. Everybody, at RealWealth, we work with 15 different teams, and each one of those teams all has a different proforma that they use, their product, and it gets really difficult for us even to try to make sure that we're comparing apples to apples as much as possible. And so, I want to encourage those of you who see these proformas and have the same challenge. It's typical because everybody uses a slightly different measure. So what's important is that you consider returns over time, not just looking at a year one projection of cash flow, but really understanding holistically the return on investment that a property can offer you, making some assumptions about rent growth and appreciation. These are some important things that again come up all the time in my calls with clients. Yes, we're still in the cash flow is king camp. We want all of our costs to be covered. We want some margin there. But if we hyper focus on cash flow, it doesn't paint us the whole picture. We know that historically over time, rents will go up. So our income will increase on the property. Our expenses will also go up, though generally not as fast as the income of the property, because a higher portion of our fixed costs or our costs are fixed. Things like insurance will go up, of course, maintenance costs will go up, but your mortgage should be fixed. Taxes, depending on where you're investing, that could be pretty volatile as well. So you've got to factor in that these variables over time, the income and the expenses are adjusting each year with what's happening in the economy. We also know that over time, property values are going up. They always have, right? If you've seen Kathy present, she always pulls up that Fred chart that shows home values over time. And you can see, yes, home values respond to market cycles. There's a little bit of short up and down ticks, but over time, home values have always gone up. This is why we play the long game. We're buy and hold investors. And then also over time, our equity accumulates. As I mentioned, not only do you have a renter paying down that mortgage for you, but your home is also appreciating. So you're sitting on more and more equity as long as you own that asset. So if you are not considering returns over time, you're only looking at year one cash flow, you could be making some long-term decisions based on short-term insights, and that could ultimately cost you. Now, understanding different investors have different priorities and objectives and returns, we might get into some of that today. You really want to look at your returns holistically over time. So, like I said, RealWealth, we get all of the proformas from the teams that we work with. They send us deals. We filter through them and kind of decide which deals we want to present on webinars and promote to our list or share with our list. You can find the sample properties in any of the markets that we're in. This is a screenshot here of the Realty portal when you're logged in. I'm on the Cleveland team page here. On the left-hand side, you'll see sample properties, and you'll be able to see our RealWealth standard proforma. Okay, so this is the deal that was just recently featured, just a couple weeks ago, featured by our Cleveland team. So this lets you see kind of, this is a real deal, purchase price of $179,900, estimated monthly rental income of $1,450. And here's some of the specs of the home. But what we demonstrate to you guys is a pro forma that, yes, shows your fixed costs and gives you that year one cash flow projection. Sorry, I'm having a bad delay with these slides here. There we go. The left-hand slide here is the left-hand side of the slide is the purchase analysis. So this is a standard year one projection cash flow pro forma, right? Explaining all of the fixed monthly expenses. Oh, there we go. We've got our gross rent there, $1,450. Our principal and interest payment, $886. Taxes, $190. HOA, not applicable for this property. Insurance at $58. Property management of 8% of the rental income is $116 a month. So our total monthly cost is $1,251. When we take our rental income and subtract the expenses, our known expenses, this gives us a projection of $199 of cash flow per month. Now, you've probably noticed, if you've looked at our pro formas before, we don't include a maintenance and a vacancy overage. And that's not because we forgot it. It's intentional. We don't want to inflate or deflate our pro formas. Again, we're looking to create as much of a standard as possible for you, for your viewing and kind of understanding of the opportunity. But maintenance and vacancy are guaranteed. If you read the fine print there, we explain that you need to plan to set aside 3 to 6% of the rental income for maintenance and vacancy costs. But that might vary depending on your comfort level, depending on the age of home, depending on the size of your portfolio. So our pro formas just include those fixed prices. Now, the right side of the pro forma is really what we just discussed. It's really trying to project and think long-term about what this investment can do for us. And this is where RealWealth we've leveraged a specific tool. We were looking for a tool out there that could help us run this analysis really quickly and easily on property. And we came across dealcheck.io. And this is basically a software that we're going to go over in a little more in depth to help you project what these properties will do. So in this software, you can put in some assumptions. So we've used very conservative assumptions for the different market types that we're in. Cleveland, we consider to be more of a linear market, slower growing. So we use a standard appreciation assumption of 3% a year. We use a standard income increase, meaning our rental increase should be 2% a year. Expense increase 2% a year, and selling costs, meaning if we go to sell this asset, you're going to pay 6% in agent costs. So these are our standard assumptions. They're our best guesses, but they're not known. And in fact, most of the times when I share these assumptions with our teams, they think it's overly conservative. But I think better to be conservative and like the numbers than to pad the numbers and then be disappointed when it doesn't hit it. So it's why we're a little more conservative. So what DealCheck does is it allows you to put in these assumptions, enter in all of the data here of known costs for the investment, and then it will project out for you year 1 through 30 of how your cash flow will grow over time. It also shows for you total equity. So it shows you principal paydown and appreciation. How much of the money that's in that home has your name on it? And so again, you can see year 1, it's high because you just put $44,000 down in the investment. So some of this is your own seed money here, but you can see how by year 5, you've nearly doubled your money. So again, we try to project out, we just project out 10 years here, but DealCheck does project out the full 30 years once you pay off that home. And then we have selected some of the key metrics that we think most investors are considering or looking at when they're analyzing an opportunity. The first one here is cap rate. The cap rate is a really common metric, but it's honestly more common when analyzing commercial property than it is residential property. And it's a great metric to use because what it helps you gauge is it helps you gauge costs, expenses of an asset relative to its value. So generally you want to go find the property that's the highest value but has the lowest costs, right? But what a cap rate doesn't factor in is debt service. It's assuming that you don't have a loan on the property, right? And since most residential investors are using conventional, fixed rate loans, you want to factor in your return on investment, not how much the home is worth rather, but how much money I have put into the deal, my down payment. So cap rates are important, but just know that it doesn't paint the whole picture, and it doesn't reflect the challenges of high interest rate, mortgages. The cash on cash return, this is another very popular and probably the most common metric for people to look at. Cash on cash return is looking at how much is my annual cash flow, the total of my annual cash flow relative to how much money I put in the deal, my down payment plus my closing costs. That factor is telling you for every dollar I've put into this deal, this is how much it's giving me back in usable cash every year. So cash on cash return is the metric that cash flow focused investors focus on. Unfortunately, when I talk to a lot of traditional stock investors, this is the only metric they look at, and they compare like stock returns to cash on cash return. Like, why would I go invest in real estate for 4.5%, when I could get 6%, totally passively in the stock market? And, I have to explain, like, well, that's only looking at the dividend. It's only looking at the cash flow of the asset, but it's ignoring all the other, ways that real estate pays you and all this equity that's accruing for you. Return on equity. This is another interesting metric. Return on equity is explaining to you what is your return? How much money are you getting back from this deal every year relative to how much equity you have, your equity position in the home. The longer you hold a home, the more equity is accruing. Therefore, if your income isn't going up at the same rate as the equity accrual, then your return on equity is diminishing over time. This is a metric that I encourage a lot of Californian investors to look at with the properties they currently own. They might have great cash on cash return, because their cash flow has grown substantially and they put a tiny little bit of money on that property, 15 years ago or 20 years ago when they bought it. But if they were to calculate their return on equity, it could be pitiful. They have all this trapped money and it's only generating, $1,000 a month of cash flow, which seems like a lot compared to these $150 deals that you're seeing on our platform, but it's not taking into consideration your equity position. And then this last metric here is your total return on investment. So this is looking cumulatively. If I take all the different ways that real estate pays me over time, what is the total rate of return that the asset has given me? In year one, or I should point out, the thing about this metric is that it assumes an exit. It's a realized gain, right? Equity is an unrealized gain until we sell the asset, right? It's hypothetical. Until someone closes on a purchaser closes on that property, the value is hypothetical. So to see this as a realized gain, it requires a sale. And we know selling cost is 6%. So it rarely makes sense to sell a property in year one. That's why you're always going to see that figure most of the time be negative. But very quickly, this percentage just gets ridiculous. So that's a quick kind of orientation to our proforma. And again, we power these by deal check. If you scan that QR code there, you can look at the deal check platform. Again, going back to our website, this is the standard proforma that you'll see. And at the very bottom of our proforma, we include a link to the PDF report, the full report that we have generated on deal check. It's a 10 or 11 page report. More numbers than you would probably care to look at on an opportunity, more than most people could understand. But if you are a data nerd, you definitely want to check out those full deal check reports and you'll enjoy the conversation that follows. So again, deal check is our preferred technology platform. I have asked Anton Ivanov, the founder and CEO of Deal Check, to join us for today's presentation. So Anton, it's good to see you. How are you?
I'm doing great, Leah. Thanks for having me. It's always a pleasure speaking to you and RealWealth members and helping you guys understand property analysis a little bit more, which is exactly what the software does.
We were desperate. Detail. We were desperate for a tool, Anton, to help us just maximize time, right? We needed something fast. We needed something that was maintained by someone else, right, that we could throw a whole bunch of deals into, because we're analyzing a lot of property every day. And so we came to you for our own benefit and then very quickly realized, hey, I think our members could benefit from this as well. Because it does give an investor a lot of autonomy and control over, running their own financial analysis.
Right.
So we're super grateful to leverage your tool here. I would love if you could kind of introduce your own kind of investing background and share with us how you came about to create DealCheck?
Yeah, actually, my story kind of follows a lot of parallels that it sounds like how you and your husband started. So, me and my wife, we were both in the Navy active duty, and we got into real estate after we separated from service and then moved back to California. And, we started with buying our first property kind of as a house hack. So, it was a multifamily, a duplex unit where we lived in one of the units and rented out the other. And obviously, right there, when we were buying our first property is where the need for property analysis became extremely clear. And that kind of started planting, the first seeds of DealCheck and kind of the software platform that it eventually became. And as we continued growing our portfolio, so we invested in a few properties in California. That was it's a tough market and still is. There's not a lot of good deals to be found there. The prices are very high, the rents are higher, but not not really as high as the prices. So we started investing out of state. We actually followed a very similar model as RealWealth, which is kind of more turnkey properties. And we bought a few of them in Birmingham, Alabama, and Atlanta. And we have been very successful with them. We still own quite a few of those initial homes that we bought, even though we kind of moved on to larger multifamily properties as time went on. But I would completely agree with you, kind of what you mentioned earlier in the webinar. Looking at year one cash flow, kind of especially when you're buying more turnkey investments, already rehab properties, is kind of probably not the best way to analyze them. We just to give you as a personal example, we bought a home in Atlanta. This was probably, close to 8 years ago, and I think we paid like 85,000 for it or something like that at the time, which was for that market fairly high. It was renting out for, don't remember exactly. I think it was somewhere around 850 a month. Nowadays, that same house is probably worth close to 200,000, and we're renting it for 1,600, right? So that just kind of shows you the power that if you do pick a good rental market, it's a growing city, it has good macroeconomic foundations, good population, good job growth. There's very high chance that both rents and prices will grow over time. And I think that will, over the long terms, if you look at your ROI, IRR, a lot of the metrics that you mentioned, they may look a bit lackluster in the first year, maybe first few years, but over time they get much, much better. And so I fully agree with you that kind of looking at a fuller picture, 10-year horizon, 15, maybe even 20, some folks don't ever sell their rental properties. I think that's very important, both, looking long term and obviously looking at your first few years. You don't want to maybe a rental property that's just completely draining your wallet with negative cash flow, but kind of looking at all aspects, a lot of different return metrics, and not just focusing like on one number. Maybe it's cash flow and hey, what is that? And if it doesn't meet certain expectations, you pass on a deal. So
Yeah,
definitely agree.
Something, Anton, that I always point out, this just came to my mind when you were talking too, is if you're buying really cheap property as well, a cash on cash return metric, $10 or $15 to your proforma, to your cash flow projection, can cause huge swings in the cash on cash return. So you've got to kind of quantify, okay, maybe your threshold is a cash on cash return of, minimum 4%, ideally you want to be 6% or higher. If you're buying an $85,000 home, you should know that difference might be $10 a month, or $20 a month.
Yeah.
And that's maybe negligible.
No, and I think property analysis, I remember I am a little data nerd myself, obviously, kind of founding the platform that is based on data and property analysis. It's a bit overwhelming at first, especially when you're a new investor. I was there. I know a lot of folks are there. What I've seen and kind of done myself a little bit, a lot of people, they kind of hear some people focusing on this and this metric or this and this metric, and they get too hung up on certain like minimum criteria or certain specific returns. And I always encourage folks, and we've built our software around, like you said, maybe it's even overwhelming with how many metrics and numbers it's presenting you. But I think it's important to look at the bigger picture, look at all your returns metrics, not just in the first year, but in year 5, in year 10, look at your kind of exit strategies and what would a sale of a property hypothetically look like in 10 years, and just kind of look at it holistically. It's very different from stock investing. I think it's a very
Mhm.
good point you mentioned. I can look at a stock, say it's appreciating 6%, maybe it has a dividend yield of 1%. That's about it. There's kind of not a lot of nuances. There's not as many ways to receive a return through equities as there are through real estate, as you mentioned, equity appreciation, cash flow, loan paying down, tax benefits. There's a lot of them. And kind of when they all come together, and the more you understand about a deal, that's when you, I think, start to get a much more fuller picture,
Mhm.
and look at deals, from different aspects, and not just say like, hey, is this $100 cash flow or 6% cap rate or whatever that
Right.
one number that you're focusing on that maybe you've heard that you should focus on or somebody told you, but not always the best approach.
Yeah, you're so right. So I want to give you some space to kind of, high level tell us what Deal Check does, and then I
Yeah.
want to jump in the tool live and let you kind of demo kind of how this tool works.
Absolutely. So deal check, in essence, like the core value proposition, why we built it, is a property analysis platform. It's a tool that we've built that helps you analyze a variety of real estate, properties, not just rental properties, but BRRRRs and potentially flips and multifamily buildings and other ones. So it's really designed to help you take you from, hey, this is my first time looking at a deal. Maybe I found it on the RealWealth website or somewhere else. And starting from that address, working all the way to basically presenting an offer to the seller. And in between, we've built a lot of tools to help you, import data for this property automatically. So you're not guessing on a lot of things like property taxes and insurance estimates. Maybe you have your own, maybe you have a broker or somebody else who can give those to you. But a lot of investors, especially out of state, I know have a hard time estimating their expenses. So we've built in tools that allow you to import that data automatically for each property you analyze. And then obviously we provide a lot of different worksheets and kind of ways to customize each deal, be that from financing, to maybe if you're doing a rehab, maybe not so much if you're buying kind of turnkey properties or real wealth properties, but if you are buying more traditional rental properties that need rehab, you can customize all of that, drill into all of your expenses, actually, estimate what you're going to be paying for taxes, insurance, maintenance, vacancies, enter all of that for each of the properties, and then allow you to view a full financial picture, not just for year one, but for all the way we actually go to 35 years into the future. So you can see exactly, what your returns are going to be in future years, what your equity buildup is going to look like over time. We have some nice graphs that show that. And we even show you your sales strategy. So supposed to be, maybe you have a goal of holding this property for 15 years. You can open up our projections and see what will I sell it for, how much is my total profit, accumulated equity, and all of that stuff will be. And then there's tools like rental and sales comps. Obviously, it's very helpful, especially if you're buying rental properties, to know what the estimated rent will be. On the RealWealth website, a lot of the properties are already fully rented, I believe. So there's probably a tenant in place. It's always a good idea to, just check, are they paying about market rent? Or if you're buying vacant properties, with no tenant in place, then getting correct rental estimates and comps is absolutely crucial, because if you get that number wrong, that's kind of your top number in the cash flow
Mhm.
analysis, right? If that's off by $500, then it just
Yeah.
trickles down, and you could be far off from your initial cash flow estimates. And then we have great reporting features, what you mentioned earlier, that you can view on the RealWealth website with one click of a button, a PDF. Maybe it's a little too big for some, but we do throw a lot of information, maps, photos, comps, projections. It's really designed to show you a full picture of your deal, and we have different investors, different users of our software focus on different metrics, and that's totally fine. I just think it's important to have a full picture. So we've really built our tool to be a comprehensive property analysis platform that's easy to get started, for new investors especially, and I'll show that a little bit in the demo. We have a full glossary and kind of exact formulas we use to calculate each number. So it's not a black box like a lot of, maybe you download a spreadsheet or using somebody else's calculator, and it just kind of spits out some numbers that you have no idea really how they arrived at those numbers. But with deal check, you can actually see each formula, and you can start to understand and learn how the formulas are calculated. We actually had a ton of new investors that always reach out to us and say, hey, it was so great because I'm actually learning what these formulas mean, how they're calculated, how to use them, as opposed to simply like saying, yep, this is my cap rate. I'm not
Yeah.
sure what that's telling me or what that means, but
Yeah.
here it is. So
I also like that it gives you the opportunity to like enter in the data yourself. I mean, I kind of use it as an opportunity to corroborate the inputs,
yeah,
like to your point. I mean, you can take someone's performa that they're giving you or not. Maybe you're analyzing deals on your own that you're finding on Zillow or something. But you can take a performa from a team, and rather than just spitting in like exactly what they put for taxes and insurance, you can use that as an opportunity for you to go and verify that independently, right? Put in your own insurance quote
absolutely.
in the fields.
No, I think that's absolutely crucial, and one kind of thing that I always recommend, being myself as somebody who's done a lot of turnkey investing, a lot of stuff, a lot of times, you kind of get some numbers from the turnkey provider and the Real Wealth website, and I know you guys do a very good job at kind of verifying and vetting, who you work with and the properties that you get, and like you said, you screen them to only present the best deals to your members, but frankly, a lot of some turnkey providers don't do that, unfortunately. So when you're buying a property, when you're looking at what somebody showed you, it's 100% in your best interest to verify everything, every number. Maybe you don't get as detailed if you're screening dozens of properties a week, but if you get to the point where, hey, you're getting close to putting an offer on this house, I would absolutely suggest verify all the numbers, run different scenarios. Maybe you vary your financing terms a little bit. Maybe you put a higher down payment and compare that side by side to see how that will affect your future cash flow, returns, projections, so forth. So um,
Right.
we definitely offer all the tools to do that. So I believe my screen should be up, and this is just our homepage. Again, you can get started with DealCheck at dealcheck.io. That is our website. You can use our software and our platform on any computer, laptop or desktop. And we also have great mobile apps. So if you search for DealCheck on the Apple App Store or Google Play, you can get all of the same tools, analysis, projections on mobile. It's just kind of optimized for a smaller screen, but it's a great way if you're driving around, if you're maybe traveling, or you're just a busy person and you're on the road a lot without your computer. Get DealCheck on your mobile device, and then all of your data settings and stuff like that will sync between all of the different accounts and devices you use. So and I'll hop over really quick to our actual website version of our software. Just highlight a few specific features. So when you first open it up, it shows you your dashboard of your properties, and you can see there's different categories like rentals, bursts, flips, wholesale. Support probably about a dozen different strategies, if not more, and different property types. Today we'll focus on the rental property specifically, which kind of are more appropriate for the properties that you'll see on the Real Wealth website. And a few cool things, obviously our property worksheet, I mentioned it earlier, we offer a lot of options to customize each deal. It gets a little bit overwhelming. Again, we have a lot of presets. So when you first create your deal check account, a lot of stuff will be pre-filled, for you. And that's a great place to start. You can get some rough estimates and start working with our software immediately. But there's tons of ways to customize each deal, and we specifically designed this to be very flexible. We're looking right here at the financing sections where you can configure exactly the terms of financing using amortizing loans, interest-only loans, balloon payment loans with different compounding and amortization schedules. You can customize your closing and rehab costs and rental income. Obviously your vacancy rates, your operating expenses, where we give a very detailed worksheet that you can break down all of the expenses that you will have for a rental property, like taxes, insurance, property management, stuff like that, all the way down to your long-term projections that Leah showed earlier that they use for presenting real wealth properties. Obviously, your best guess estimates for what the appreciation, income, expense increases, and so forth will look like over time. So there's a lot of options here. Again, you don't have to kind of get into nitty-gritty and customize everything at once, but once you start learning more and more, you'll appreciate how many options we give you for controlling each specific parameter of the property. And then obviously the bread and butter page, this is our property analysis. This is where you will see the full breakdown of each deal. So a little bit more expanded than what you'll see on the RealWealth website, but a lot of the parts will obviously be the same, like your purchase and rehab, how much cash you will actually need to close on a transaction, what your financing terms will be, what your year one cash flow will be, break down all of your expenses, kind of have a nice little graph for where your money is going, and then see your investment returns and different ratios. There is a lot on here. Different investors like to focus on certain things, but we do present pretty much every ratio and metric that at least our team has ever heard of, or the most popular in the real estate world. And one thing I mentioned that we offer is you will see little question mark icons next to pretty much every term and metric that gives you both a definition or an explanation of what that means, as well as a detailed formula that we use for that specific return or metric. And you can actually click on them and get a little bit more explanation and a link to all of the various inputs and outputs and metrics that we calculate. This is a great way to learn, I think, about real estate investing. And like I said, I would encourage everybody who uses our software, to not just take our numbers for granted, but actually read a little bit about them. We have a lot of articles on our blog that kind of showcase and go into a lot of detail about each metric, but I would encourage everybody to actually understand what the numbers are telling you. So if somebody asks you, hey, what is cash on cash return, like Leigh explained earlier, you'll be able to say it, and not just say like, well, it's some I saw on the Deal Check or RealWealth website, and I'm not exactly sure what that means.
We love that you guys put so much emphasis on that. Your glossary is amazing, and I mean, we totally used some of your definitions as well. We added the similar tooltips to ours, where you can hover over our proformas and see the definition. And it's so helpful. I mean, I saw Randall send in a question while we're here asking for clarification on how you calculate a cap rate. So you can go to this tool and hover over cap rate, and it will give you the word form explanation,
Exactly.
but then the formula as well, so that you can not just know that it's a 7%, but understand what that actually is telling you.
Absolutely. And we do that for every single metric. There's not a metric or ratio that we don't calculate that is not defined with an exact formula and explanation, like you said. So yeah, if you have any questions about any return, just look for these little help icons. They're on mobile as well as web, and kind of click into it, drill down and understand. If you have any questions, contact your RealWealth advocate or advisor, or our support team would be happy to kind of give you additional information.
Yeah.
And then following property analysis, obviously we've seen these projections on the RealWealth website. There's just a little bit more on the actual Deal Check platform, where you can see how all of your income, expenses, your cash flow, your tax benefits that we mentioned were another form of return from real estate investments, equity accumulation, sale analysis. I mean, there's a ton of information here, and you can kind of look through from year one all the way to year 30 and beyond, to see, depending on your time horizon, what your numbers will look like. And you will see, how your cash flow may not be, as amazing or maybe as high as you want right now, especially with the current interest rate environment. But then as the longer you hold the property, the more that kind of improves and increases over time to really give you a long-term picture, especially if you're a long-term buy and hold investor. And same with your equity, obviously. Using financing, you will not have as much, and then over time that will grow as you pay down your loan. So great way to visualize your returns over time. And then there's a lot of other features in Deal Check. There's sales and rental comps. Like I mentioned, probably rental comps are especially important for rental property investors. Again, if the property is already rented, there's property management tenant in place. Not so much a worry for you right now, but if you're buying a new property, we provide estimates actually from our other platform that I think we'll talk a little bit later, called RentCast, that gives you very accurate estimates for what the property can rent for, as well as actual rental comps, so you can see what nearby homes are renting for, what they look like, what their size is, to give you an idea. Hey, are you in the ballpark for the rent? Are you a little, under, over? It's important to know, because rent has such a big impact on your cash flow. And I'll bring it down to our reporting feature. Obviously, this is something Leah mentioned already. You can see this on the RealWealth website, but with one click of a button, you can generate a complete PDF report that will go into all the details about the property, where it's located, the maps, and then obviously all of the analysis that we just touched on, the cash flow projections, including your future year projections, your sale analysis, your trends, your comps, and stuff like that. So this is a great report if you want to save this yourself. You maybe have partners or other investors, maybe your spouse, that you'd like to share or get an opinion on before you invest, or even your lender. We had a lot of investors that say their lenders absolutely love these reports. If it's a lender that kind of focuses more on investment real estate, they know these terms, there are specific metrics they're looking for, and for you to just send them one complete PDF will save you a lot of back and forth.
I think I shared with you last time, Anton. I mean, I love generating report for all the properties that I'm purchasing. I love saving them in my file with with all of the details of my property and then referencing back to them years later. Most of the time, I'm shocked at how conservative I was. Maybe I'm being too conservative in my
Exactly.
analysis, but I do enjoy kind of looking back at my original proforma that made me buy it, and giving myself a moment to like acknowledge that, at least in most cases, my return far exceeded what
Right.
led me to what I thought it would do, and I bought it then. So
That's what you
I
want to
just
see.
right.
Yes.
But also, I used this report when I was selling a property last year. It was a property that was more than likely going to sell to another investor, not
Uh-huh.
a retail occupant. And so I generated a deal check report and, put in some, basic assumptions and then sent it to my realtor, so that she could share it with prospective buyers, right? Kind of demonstrating,
Absolutely.
that this is a working, investment for someone.
Yeah, if you're working with a realtor that's helping you find properties, we actually have users that say, I tell my realtor to get their own deal check account and send me deal check reports. I mean, if you're an investor and you're looking to buy properties, these are reports you want to see. So if you can get your realtor on board with saying,
Mhm.
hey, send me a deal check report, I'll look it over. I think that's a great way for you to actually get the information that you're looking for, just like you can on the RealWealth website. I think it's a great service that you guys started offering. It just saves so much time and helps investor actually see the specific numbers that they
Mhm.
are looking for when buying rental properties.
Yeah, while we're transitioning back to the presentation here, Dan writes in a good question. Does deal check, you mentioned some of the tax benefits and the tax calculations there. Does deal check have an option to factor in things like a cost segregation?
I don't believe so. We show the tax benefits. We show your potential income tax deductions. We show you your potential interest rate write-off, and depreciation. I don't believe we have cost segregation, something on our long-term roadmap. And a lot of times with tax, we do show that what you can save on taxes. We're a bit hesitant to just immediately include that, like in things like your ROI. That's why you'll see us not actually adding tax deductions to ROI calculation, because taxes get really complicated, right? And your tax situation and exactly what you can write off, what you can't, that there's stuff like loss, basically ceilings where you have to carry over your losses and stuff like that. And it's a bit beyond the scope of deal check for us to exactly say, hey, you will exactly save this much money on taxes, because we don't know the rest of your financial situation. So yeah, go to the buy and hold projections and see your tax benefits and deductions there. I would again just caution folks looking at that as like a real return, to understand that because
Mhm.
taxes may get a bit complicated, it's important to consider that, hey, maybe you will not be able to realize that full tax benefit.
Yeah, I'm so glad you realized. I mean, I've seen some performas where they factor in the tax savings like it's cash flow,
Yeah,
and I'm like, well, wait a second,
exactly.
that's not a an income item necessarily.
Right. So we're just a bit cautious with that, probably a little more conservative. So you can
Us
see
too.
them, but I would just caution again, saying like, yeah, plus 10,000 yearly cash flow because you just save this money on taxes, maybe not.
Yeah. Yeah. So Anton, you guys have some different pricing memberships available. We at Real Wealth, obviously, we analyze a lot of deals, so we're pro account users and
Yeah.
love all the features of it. But explain kind of the different options that someone might have.
Yeah, so Deal Check is fully usable for free, and this is 100% free, no credit card. It's not a trial, it's actually free forever plan. I always encourage everybody to start on that. There's some limitations, like there's a limit to how many properties you can add or how many comps you'll see, but I would say we've designed our free plan to be fully usable. It's a great way to start, especially when you're a new investor. And then we do have some premium options. They offer different things, like depending on how many properties you analyze, maybe the plus or the pro plan will be better. But it's a natural kind of progression as you start to hit those limitations inside Deal Check. It'll kind of prompt you to upgrade or show you what you will get on the plus plan. I would say our plans are extremely reasonably priced, especially if you compare us to other offerings. It's a few cups of coffee a month. You can get access to even our full pro unlimited tool. And then I know specifically for Real Wealth members, we have a 20% off promo code. It's just Real Wealth without any spaces. So Real Wealth, if you use that when you upgrade to either Deal Check Plus or Pro, you will get 20% off on your subscription for life, which will bring the cost down to very, very, very reasonable. But again, there's no pressure to upgrade. Start on a free plan. Get familiar with our software. Once you get going, analyzing more deals, look into our upgrade options.
Yeah. I also forgot to mention when you were on the demo, we love and we use the template feature.
Yeah.
We create templates for the different markets that we analyze so we can set different parameters or assumptions based on a market. Again, if you're analyzing a lot of deals, it just makes it very simple.
It does, and there's a lot of different little productivity tools. Again, I didn't go over into them to help save us time, but yeah, there's tagging and having your ability to kind of sort and organize your properties and create templates like you mentioned. So there's a lot of little productivity tools I think you'll appreciate if you start using our software, especially for larger kind of quantity of property analysis that we've built in. We basically want you to be more efficient, right? It's not the days where I'm using Excel. I have like 10 tabs and 5 worksheets, and I'm trying to remember, did I change this and this sheet? Did I update my formula? It's kind of very consistent analysis.
Yep.
It's all in one place. And like Leah mentioned, you can save your historical properties to both use them kind of as a learning tool for yourself and compare to your actual returns to see like, hey, how did I do? Maybe I should tweak my assumptions a little bit to be better at property analysis next time.
You're giving me flashbacks when we used to send our Excel formatted proforma
Yes.
for people to use, and they would accidentally mess up a formula or delete something, and then it wouldn't work. And so yeah, this
I
eliminates all
just
of
think
that.
that's like 2020. I don't know, 2000, early 2000s, 1990s. We went through the Excel phase and it was great, but I just think
Right.
there's
This is
kind of
simpler.
better and more efficient ways now to do
Yeah.
that.
So Ben asked a question here about like understanding how you got your rent comp. So this is kind of a perfect segue
Yeah.
into your sister platform, Rentcast. Tell us about this.
Yeah, so Rentcast is our newer platform that is kind of a very data-driven, very rental data-driven platform that we launched actually after DealCheck and after we realized that there's very few tools out there that have accurate rent estimates and rental comps, but that information is so important and crucial for analyzing rental property. So what Rentcast does, among other things, is helps you find out rent estimates pretty much instantly. If you go to rentcast.io to our Rentcast website, you can just type in the property address and then things like the bedrooms, bathrooms, what the sizes of the property if you want. And what we do is we actually scan the entire rental listing market. We look at all the rental properties out there and what they're being listed for rent for. And we have a proprietary kind of machine learning algorithm that uses that information, looks where the property is located, and uses the nearby comps to calculate rent estimates for your property. So there was a lot of trial and error. We probably took a few years to fine tune that algorithm and develop it. But it's something we're really proud of, and we get a lot of people saying like, "Hey, this rent is spot on." Obviously it's kind of it's automatic, so it's not a person actually calculating the estimate or an appraiser. So every now and then there'll be a little bit discrepancies. But for the most part, I think on a nationwide scale, especially in kind of more urban, densely populated areas, it's extremely accurate. And you'll see the rent estimate as well as the comps. And so you'll see that information in deal check. We actually bring in our rentcast rent estimates in deal check, so you don't necessarily need to use the rentcast by itself. But if you want a platform that's kind of, you can look up rent estimates really quickly without having to add it, and maybe you don't really care about analyzing the pro forma necessarily, or if you actually have existing rental properties, Rentcast actually comes with a few cool portfolio tracking tools where you can add the properties that you own, and it will send you rental market updates and allow you to set up alerts that are really handy when you're leasing. Because what we found, a lot of people who have larger portfolios, or maybe property managers who are a little more hands-on, they kind of get in the rut of like, yeah, we'll just renew the rate at the same rent as last year, or maybe we'll add like $50 to the rent. Whereas in a lot of markets, especially in the last few years, we saw rents kind of go up pretty rapidly. I know we have some properties in Cali, rents were going up by 500, 600, if not more a year. And what Rentcast allows you to do is always kind of be on top of the rental market, understand what you can rent the property for, so you can kind of not leave money on the table, basically. Maybe if it's a good tenant, you don't want to always bump them up by so much, but you're kind of balancing right there in the middle somewhere, and increasing your rental income, which is always the top line in your cash flow analysis. And we build the Rentcast platform to help you track your existing rentals and lease them more efficiently.
I think that's important even for passive investors like us that are using professional property managers. I think the
Yes.
tendency for some investors can be to just take your hands totally off the wheel and let the property manager drive. But I am so adamant to people, like, keep your head in the loop of what's going on in the market
Right.
where you own property, because your property manager, is fallible, and they might be more conservative than you are, and perhaps they make a suggestion about a lease renewal rate, or a new lease rate after you've had a tenant turn, that when you go and do your own independent research, you realize is maybe more conservative than you'd like to be. And so I've always been one to kind of confirm before I ever just accept whatever proposal they have for rent increases. And a tool like this, especially if it gives you notifications, you have no excuses to kind of know what you've got your finger to the pulse.
Yeah, and we have actually a lot of property management companies that start using our tool because their owners said, I want to see a Rentcast report,
Mhm.
which again, through Rentcast, you can generate a great PDF that shows you the rent estimates and comps. And yeah, I would encourage investors to ask, show me the Rentcast report, like justify, what my rent should be, because yeah, you can be hands off from your properties. And me and my wife, we own 40 units across a few states, so it's a lot of property. I can't manage them each one,
Mhm.
but I want to either make sure my property managers are on top of the leases, or again, I can use Rentcast to set up little alerts, notifications when the leases are kind of coming up for renewal, for me to get an email. At least I can ping that property manager of that specific property to say like, hey, here's the Rentcast estimate, here's the report, we're maybe way under it, so let's kind of find a medium, let's brainstorm what we are going to raise the rent by. So yeah, I would encourage everybody to check out. I think it's a great companion platform for deal check, especially if you already have rental properties and you'd like to kind of be a little more accurate with them. Rentcast.io, there's also a free plan. And if you do want to upgrade to Rentcast Pro, which comes with a little more features, you can also use the RealWealth promo code. Again, that's RealWealth with no spaces, to get 20% off your subscription for as long as you subscribe.
Anton, what kind of features do you get, since you guys pull like the rent projections from Rentcast to Deal Check? What kind of additional features, I guess beyond the notifications that you mentioned, do you get access to when you subscribe to both?
Yeah, so with Rentcast Pro, you get the market analysis tool. So this is something we don't have in Deal Check yet. This is basically an aggregate look, like a top level view at the zip code where the property is. And you can not only see like the averages, what, studio, what 2-bedroom, what 3-bedroom properties are renting for, you can actually see historical trends with how the rents progressed in each market. And that's a really important data point, especially if you're considering investing somewhere. As I mentioned before, I think rent and price growth are key components in being a successful long-term rental investor, because you don't want your rents to be stagnant, because your expenses are going to go up over time. So with Rentcast, we provide great kind of market reports that you can look at trends, make sure this is a good area with increasing rents or at least stable rents. in terms of kind of downtime. So you'll get that as well as our suite of portfolio tracking tools. And again, this is where you can add your existing properties that you own, set up alerts, set up notifications. You can share them with other people, that the like a property manager can send notifications to their property owners. And then you can also view all your portfolio holistically in one place and actually track your leases and see how your leases kind of on a nice graph compare to the rents that you could be getting. And again, this is all designed to optimize your portfolio, not necessarily like help you track expenses. There's other platforms that do that well, but we really want to make sure you maximize your rental income and make sure you stay on top of your lease renewals and the general market trends in the area to help you get as much cash flow and profit as possible.
I love that. We've been using Rentcast internally. Our property team managers have been using it as they vet new markets and vet new opportunities or new teams. We've used that platform to kind of help us keep get an accurate projection on, and just to make sure that, some salespeople will want to pad the rents, right, to make a proforma look really good. And so it's great to have an independent way to verify that.
Well, unfortunately, again, I'll go back to, I know you guys do things very differently. You have a great business model and kind of vetted providers, but I have seen where, you're looking at turnkey properties and there is a tenant in place, but they've used like 3-month incentives or something like that to put a tenant in the property, paying a few $100s over what really the property could rent for. And then when you come up for a renewal, or if the tenant leaves and you realize, hey, I can't really rent the property and people think it's not possible, but it is. If somebody gets 3 months free rent or something, some crazy incentive, you'll be surprised how much you can kind of charge for rent, or if it was a short-term lease or other factors. So I think it's always important to know what your properties can rent for, what are the going rental rates for the market for the area, because you need to be able to release them at some point in the future.
Yeah, just this week we were on a meeting talking about, a property where a team is, guaranteeing, or builder is guaranteeing a certain amount of rent for a specified period of time, which is great. I mean, it's a concession. But we were all discussing internally, like investors have to know what it might adjust back down to in a year's time, or when it comes time for lease renewal. So yes, it may satisfy the year 1 cash flow, but year 2 might put you very negative, which may or may not be okay, depending on how much extra you get in year 1. But you at least need to know, go into it eyes wide open.
Absolutely, I think it's spot on.
So next steps for our investors that are watching this on replay or watching it live. I mean, obviously, you've heard Anton long enough to know why we've chosen to work with his company. They just make it so easy for us to analyze deal at volume and analyze it on our turf and set parameters to our preferences. So we are strongly encouraging all of our members to create an account on dealcheck.io. The free version makes it a no-brainer. Like, at least try it out and see if it's something you want to bring into your standard process for analyzing property. And then their newer platform, rentcheck.io, Anton has been very gracious in giving us our members a 20% discount on both subscriptions with both platforms. So thank you, Anton, for extending that to our investors.
Absolutely. Again, we're all about, especially new investors, getting into this market. I know there's a lot of expenses, other things. Obviously, you have to, come up with the down payment capital. So we intentionally kept our platforms very accessible, from free plans to our very inexpensive premium offerings, so new investors can get started kind of without feeling like that they have to, dish out hundreds of dollars just for a software suite.
Yeah. Okay, Anton, we've got a couple questions here. I know we're over the hour. Do you have an extra 5 minutes to spare?
Absolutely. No problem at
all. So Greg wants to know, who would you say is Rentcast, or what would you say is Rentcast competitive advantage over Rentometer?
So I've used Rentometer, Rentometer, but it's been around for a while. It's an older platform. So number one is I've seen firsthand issues with their accuracy. I'm not exactly sure where they're getting their data and how often, they kind of update and keep track of their data. We're a very data-driven company. We actually wholesale our data. We have an API. We have some very large institutions that use our property data internally in their applications, so we stand behind it 100%. So I know our rent estimates are pretty much as accurate as can be. And then another big advantage is we offer portfolio tracking tools that I don't believe Rentometer does that at the time, where you can add your existing properties to RentCast. You can get those alerts, you can get notifications, you can view them holistically in one place, and you can add your leases and compare your current rents versus your potential or pro forma rent. So I think we're just a little bit better offering all around. Again, don't want to say anything bad about Rentometer. They've been around for quite a bit longer than us. Good platform, but I encourage you to give RentCast a try. We have quite a few users who are switching over. They just say the data is a little bit better.
Mm-hmm. And this may get too in the algorithm weeds, but I'm curious, with a rental projection, how much it's factoring in, historic rent prices, days on market, before a listing is removed at a certain rent price versus what is currently on the market.
Yeah, we're actually very kind of fairly aggressive with that in terms of we tend to prioritize newer listings, newer rental properties, especially in faster moving markets, whether that up or down, because we want to give you kind of the most accurate. If there was a property rented 6 months ago, is that a valid comparable? I would say not anymore, especially if the rents are changing quickly. And actually, in the future RentCast update, I believe it's coming early next year, will give you the ability to control that kind of a slider, like, hey, should I consider properties only like, within the last 6 months, 3 months, 2 months, even maybe last month. So if you feel like the property is in a very fast moving market, it's very kind of, competitive, there's a lot of activity going on, you can only focus on recent, rental properties that were rented, that were or that were listed, and then base your rent estimates on that. So there's a lot of kind of stuff we're working on to even make our data pretty much more accurate.
And Dan wants to know, what is the data source for RentCheck?
Yeah, so I can't I can't divulge exactly how we get the data, but basically our goal is to compile all of the rental listings in the United States. Every single listing, as soon as it goes on market, within 24 hours, we pick it up from a variety of different sources. So there's usually multiple sources of truth basically for each listing, because sometimes there's little inaccuracies. It's posted here for this price, it's posted there for that price. We collect all this data, we kind of normalize it, make sure there's no weirdness going on, and then we store it in our internal database that's updated on a continuous daily basis. And then when you make when you go to our website and you type in a property address, we calculate each rent estimate in real time. So it's not like cached, or it's not saved at some point. It's not like some old estimate. It will actually get calculated at the time that you're clicking the button on our website, and we'll pull the most recent, the most similar comparable rental properties, and then calculate the estimate based on that.
Great. Okay, so Remy says return on equity is an underestimated KPI. I totally agree, Remy. In fact, this is, I think, a valuable metric to monitor on properties that you currently own. This is why I decided this past year to cash out refinance a deal of mine that had appreciated substantially. The cash flow had also grown substantially. It knocked the socks off my original pro forma, and it felt great. It felt great to be like, oh wow, this deal cash flows $1,000 a month, But then when I looked at return on equity, it was kind of not that impressive. And so it was looking at that metric that made me go, you know what? Even cash out refinancing at today's interest rates, if it allows me to pull out this equity and control another asset over here, I improve my return on equity overall. So absolutely something that should be considered. On that note, Anton, you're an experienced investor. What metrics are you most looking at and analyzing closest when looking at a deal? Say if you're buying a passive deal, like most of our investors are,
Yep.
a turnkey investment.
So for me, it's pretty simple. It's always been three main metrics. And again, I will caution this by saying I always try to look at the full picture. So I hate for people to say, yeah, well, Anton said to focus on this, this, and this, so that's what I'm going to focus. No, please, like do your own kind of analysis, understanding. But for me, it has always been cash flow, cash on cash, and IRR. So cash flow, obviously, we touched on it many times. It's fairly straightforward. I don't want to buy even in year one deals that are extremely negative cash flow because I don't want it to be draining my reserves every month. I want some positive cash flow beginning and especially increasing over time. Cash on cash, I think, is a much more superior metric to something like cap rate. So it's a measure of return. It's obviously, how much return you're getting on your invested capital, which cap rate is a form of, but it ignores financing, like Leah mentioned, and ignores financing terms completely. The cap rate does, where cash on cash does not. And to me, that's also a more interesting metric because it uses your actual invested capital as opposed to the purchase price of a property. It actually measures like how much did you actually put in, because you can look at properties with kind of similar prices, similar everything, but how much capital you need to buy one property can be much different than another one. So if you can invest less of your own money and get the same measure of return, as opposed to investing more money and maybe getting less return, that's a more beneficial structure because you can, buy 2 or 3 properties as opposed to buying one.
Or conversely, even Anton, I mean, today's lending climate, you might be able to reduce your leverage a little bit and to get the cash flow and to get the cash on cash return that you're satisfied with, rather than just scrapping the deal completely.
Absolutely. Yep. That's a very good point. You can vary your financing terms. You can even vary other cash investments like rehab costs, for example, which I know for real wealth properties, they're mostly probably rehab, but that could, impact your cash on cash because we do factor rehab into that. And then the final metric that I look at is IRR, which is internal rate of return, which is basically an annualized version of the ROI that you see on the RealWealth website, and we've talked about earlier. So ROI is kind of your cumulative total return, meaning if I was to sell a property, let's say in year 10, I sell it, I pay my closing costs, I repay my original loan if it's still there, I add up all my cumulative cash flow, equity paid down, price appreciation. Here's my final return metric. And it's usually in the hundreds of percentages, sometimes even in the thousands if you look at future years. I like the annualized version of that, which is basically kind of a more complicated formula that says, hey, if I was to get, 10% each year for 10 years, it would add up to your cumulative ROI at the end. So I like the annualized version better because it's a way you can compare real estate, a cumulative return in real estate, to other investments like stocks and bonds and stuff like that. And it gives you a very good kind of averaged out rate of return and gives you a very whole picture on your real estate investment. So those were usually the 3 metrics I focus on. But again, I would look at a lot of different factors. I'm also not a huge fan of setting exactly very specific minimums. I can only take cash on cash 10%.
Right.
Well, there could be a lot of other great things about the property, and maybe cash on cash is 9. As opposed to maybe I go in a subpar market, subpar neighborhood, have a lot more tenant issues, and maybe my cash on cash is 11. Which one is better? Me investing for 10 plus years, I would say I pick the 9% cash on cash with less hassle, less problems any day, as opposed to try to kind of squeeze in every dollar of return out of a property, but potentially have problems down the road.
Yeah, that's a great point. Or say you can get some incredible financing terms or some unusual financing terms where you get to put less money down. Like suddenly then all your parameters kind of go out the window because I can't get this. I can't buy a deal with this little down elsewhere, So it's definitely, it's all there's definitely a relative factor. And again, that's why I kind of say you've got to understand it just enough to be able to build your own proforma and to be able to stand back and go, okay, let's consider this holistically and decide from there. Don't just go $150 a month, no way. Break even, no way. Look at it a little bit. Okay, so Philip has a question here, or a statement rather. It sounds like he has had some older properties that have just been money pits. Been there, Philip. I've bought a lemon or two in my experience. And so he's saying he'd like to see, more factored in for capital expenditures and repairs on proformas. Again, I mentioned, in our overview, we leave it off because of this exact thing. Age of home definitely matters. You've got to kind of set your threshold. Anton, what do you use? What measure do you use as kind of a standard for maintenance and CapEx?
So I've been pretty conservative with it. So I would tend to go something like 10% on maintenance, sometimes 15, depending if it's a multifamily property. maybe 5% even on capex, and this is all percentages of gross rent. But I will say it is very market specific. It is very property specific. It is very hard to give a general percentage that will work across the entire United States, across the entire property class. So it's something, if you're a completely new investor, you've never invested in a particular market or not at all anywhere, I would maybe even encourage you to speak with some other investors, maybe network, see if you can talk to other RealWealth members or a counselor that can kind of give you some pointers. I think that's a better way to get started with some kind of ballpark estimate than just saying I'll just throw a number out there, because you could just be way off. And then over time, as you invest in a certain area, if you already have property, obviously you can kind of calculate their maintenance percentages, like what you're actually paying over time, and use that as kind of a corrected baseline for your new properties that you're considering. But there's a lot of kind of trial and error and tribal knowledge. It's just experience that goes into it. I would say, I would be more conservative a little bit, at least, if you're a new investor and you just had to estimate something like that, I would, and especially if it's kind of a property, maybe not the newest house, it's maybe like kind of class B area or something like that. It's not the best tenants. Definitely something like 2% maintenance is probably not going to be enough, right? You just have to be realistic, especially like look at the rent. If the property is renting for, $1,000 a month, and you say 2% maintenance, that's what, $20, right? So it's, no, I mean, are you going to really repair a house for $20 a month? So some 200 some dollars a year? Like, no, like one maintenance trip to clear a clogged toilet will be probably, a couple $100, even from a cheap plumber. So you just have to be realistic. It's cool to kind of use a percentage that you found somewhere, but actually look at the dollar amounts when it comes out. Look at that deal check report and kind of use your own judgment. Especially, it also helps if you're a homeowner. You live in a home, you pay repairs, maintenance, stuff like that. You know how much stuff costs, right? And if you see again something like, oh, my maintenance comes out to a few hundred a year for this building, and it's a 3-bedroom home, right? Is that kind of realistic? It doesn't matter where you are in the United States. I would say probably not. Right. So I think there's just some tribal knowledge, some trial and error, but also kind of common sense.
Totally. And being realistic with the overage that you're factoring in. I mean, if you're trying to underwrite all your deals with, 25 or 30% overages, and you're mad because every deal is negative when financing is at 7.5 or 8%, and you're buying turnkey, like you're buying market value homes. I mean, to me, that's an indication that, like, to get that kind of cushion and protection, you might need to be a little more active. You might need to have a little more skin in the game, whether that's in the form of scouting the deal and finding it yourself, or bearing some of the burden of maintenance expenses, right? And not being able to underwrite them into the deal totally. So consider everything in
larger down payments, like you mentioned earlier, or not using financing even at all is all possibilities.
Right. Well, Anton, I am so appreciative of your time today, and we love what you're doing at Deal Check and Rentcast. We're grateful. It's a platform that we use daily over here. So really appreciative to you and your team. Thanks so much for joining us today. I'll let you close with some final remarks.
No, thank you again, Leah. It's again always great to speak with you, to speak with RealWealth members. I'm very happy to hear that you guys are using our platforms. I would encourage everybody to check them out either on dealcheck.io or rentcast.io. And then if you have any questions, concerns, issues, please talk to your either RealWealth counselor or advocate, or you're welcome to reach out to our support directly. We offer 24/7 kind of live chat or email support. We're happy to answer your questions and kind of get you on the right track if you're stuck.
All right. Thank you so much, Anton. And thanks everyone for joining us. We'll see you next time.